Hey guys, what's up? So if you're thinking about buying airline stocks right now, this video is definitely going to be important for you before you decide to do so. I'm going to be playing a clip of the top airline analyst talking about the current state of the airline economy. He gives his opinions on airline stocks right now, whether they're a buy or not. So I'm going to play the clip for you guys, and then after the clip, I'm going to break it down, give my opinions on it, and then we're looking at two airline stocks, one from the States, one from Canada. I'm going to be going through their financials and show you guys how it's been evolving over the last 6 months during this health crisis. And then that way we can get an idea on how these stocks are going to recover.
Hunter Key, Wolfe Research Director and Senior Airline Analyst, just ranked #1 airlines analyst on this year's Institutional Investor All America's research team. Very many congratulations for that, Hunter, and thanks for joining us.
Hey, thanks, Wilfred. Appreciate you having me on.
In terms of the broader sector, big picture question, first of all, to what extent do you think the industry has sort of mortgaged off some of their key assets, whether that's their points reward system groupings or any other areas, such that even when the market recovers, some of the upside is capped?
Yeah, it's a good question. Airlines have added an enormous amount of debt. The Federal Reserve has been extremely accommodative in terms of allowing airlines to mortgage assets that most people didn't think were this leverageable pre-COVID. So I think it's more a function of just easy money policy than anything else. But airlines still have a lot more they can mortgage in the event that the Fed wants to continue to keep these easy money policies in place. And it's going to probably take this airlines the entirety of the next cycle to pay down this debt. That leverage is going to be up probably 50% during the crisis. I don't think margins are going to get back anywhere close to where they were for the next cycle. So the next 4 or 5 years, if you're able to get through it, are just going to be about slowly paying down this pile of debt that they've raised just to survive. But they still have more assets they can mortgage if the Fed wants to continue to accommodate like this.
Hunter, my question is on demand, especially given what I was just reporting about David Taylor, the CEO of P&G, saying they see consumer habits having changed. Is it just assumed that when we get a vaccine, air travel will return to pre-pandemic growth rates? Or do you think there's going to be a more permanent impact here, especially with something like a business travel? Because we've just changed it up and it's been lasting for months, and in many places it's working.
Yeah, no, it's true. I mean, look, the longer people go without doing something, the more you just get used to not doing it. We did a survey of our clients a couple of weeks ago and asked, what percentage of your business trips do you actually enjoy, or look forward to doing, like, client golf, or just to break the monotony of the routine or something like that? And it was about 52%. So that's a lot of trips that just unfortunately just don't have to happen. And the real issue there is the types of business trips that aren't going to come back. Those are really the ones where airlines have made a lot of money. Those long, multi-day, grinded out type journeys across multiple time zones where you kind of spoil yourself as a business traveler, buy a lie flat seat on a wide body aircraft. That's going to be the last segment of business travel to come back. That's probably the segment that's going to be most replaceable for people with stuff like this video conference technology. And I don't think that's going to come back next cycle at all. But I think leisure travel will probably come back pretty quickly, but not that end segment of business travel, those really hard trips.
In the short term, Hunter, what sort of percentage share price appreciation would a stimulus bill be worth?
I don't think it's worth anything, Wilfred. I think these stocks roll over as soon as it's passed. I mean, it's trading these stocks of our clients. It's maddening. I mean, you can't do any fundamental work on them. It's impossible. There's no dispersion in the group. The intercorrelation of airline stocks is running at about 0.92. That's well above normal historical averages. They pop as a group. They sell off as a group. There's no fundamental work being done. And when that stimulus package comes, if it comes, I think people are going to start to refocus on the fundamentals. And they're going to realize that they've got all this debt, and they're going to realize they've got working capital headwinds, and they're going to realize that they've got deferred operating costs and capital expenditures. And there's going to be some analysis on the tempo of cash recovery, which is going to be slow and painful, and estimates are too high. So maybe it's worth of 5, 6, 7, 8% or something like that in the pop immediately. And then I think the fundamental work starts, and I think that's when the second wave of concern will probably start to come into the stocks. It's going to take more time. It's going to take more pain.
Okay, so that analyst isn't too optimistic on the airline stocks right now. So why don't we go into the financials ourselves? Then that way we can make an informed decision and actually see how these airline stocks are faring in the current economy. So the first one I want to look at is Delta. They were trading at around $60 and are now down to $31. So they lost about half of their value, which actually isn't a ton considering what they've gone through the last 6 months. So I do think the stock isn't deserving of its current share price, and it should actually drop further. Let me show you some of the financials to kind of back up what I'm saying here. So Delta has a forward PE of 71, where normally it's around a 5 or 7. So their future expectations are very low. They're not expecting very much revenue over the next 12 months. So that's not really the greatest sign, especially considering on September 30th right here, they had a forward PE of 23, and then now it's jumped to 71. So it's getting worse. And you can also see here their PEG ratio. That is at 17 currently, up from 6. Where it's usually at 0.73, around that range. So this is getting exponentially worse as well. And 17 is unbelievably high for a stock like this. So future expectations are not looking good. And now I want to take a look at how much cash they have on the balance sheet, because this is going to be important if the airlines can actually survive. Now they do have a lot of cash. They have 21 billion, but they also have 42 billion in debt, and this number is growing rapidly. So they may be able to survive for a while, but let's actually look at how much cash they're burning through to get an idea of how long they can survive at this rate. Okay, so looking at their income statement, we can see their revenue and gross profits. Now this is on a quarterly basis I'm showing you guys. You can see last year at this time, they were generating around 12 to 11 billion a quarter. And then when COVID struck, they dropped down to 1.4 billion, and they've recovered a little bit only to 3 billion since then. So they're still down massively from their pre-health crisis revenues. And if you look at their cost of revenue, this is not looking good at all. Currently, their cost of revenue is at 2 billion more than the revenue they're bringing in. So they're losing 2 billion just on that alone. And that's not including all of their other expenses. To get an idea of how much debt they have actually issued in the last 6 months, you can see here, this is on a quarterly basis. Just a year ago, they were at about 16 billion in debt. Fast forward a year and we're at 41 billion in debt. That is going to take a lot of time to pay down. Their balance sheet is ruined from this health crisis. So taking a look at their cash flow statement, a year ago their operating cash flow was about 957 million in the positives, and then now at the same time this year it's negative 2.5 billion. And we can see in this last quarter right here under financing cash flow, they've financed $10 billion. So they've financed $10 billion of debt is what that means. And that's just in one quarter. If they continue to finance $10 billion of debt moving forward each quarter, this is going to quickly get out of control. Okay, so Air Canada is the leading airline company in Canada. They currently have a market cap of $4.6 billion, and their share price has dropped from around $55 all the way down to 15. This is the kind of drop that I would probably expect to see this far into the health crisis. So taking a look at their cash, they have 8.6 billion on hand with a total debt of 13.68. This actually isn't too bad, but of course, if this health crisis continues on, it's just gonna continue to look worse over time. So let's see how much debt they actually are bringing on. But first, looking at their revenue. So pre-COVID, they were generating around 5.5 billion a quarter. Now in June of 2020, their last quarter, they generated 500 million. So they're down 10x in revenue. And then also note their cost of revenue. So they're down 10x in revenue, but the cost of revenue has only decreased by about 55%. So that's really bad numbers. Definitely not what you want to see. And their gross profit from this is negative $1 billion a quarter. That's really bad as well, obviously. So that's not looking too good either. Now heading over to their cash flow statement. Last year in September, their operating cash flow was 834 million. Fast forward to June of this year, it was negative 1.2 billion. And then in this last quarter, they also financed 4 billion of debt. So quite a bit of debt, not nearly as much as Delta, but this is gonna really add up over time if they can't get the health crisis under control. Okay, so I want to give you my thoughts on the airline stocks of whether they're a buy or not right now. So put it this way, with something like Air Canada, if they're free cash flow positive about 500 million pre-COVID, that means they're about 2 billion free cash flow positive in an entire year. If they bring on, let's say, $20 billion of debt, that's going to take them 10 years just to pay off this debt. That's not even including that they got to pay interest on this debt. that their operations aren't going to be back up to speed. So it's really not good, and I don't think people are actually taking that in consideration. I think that people are actually just looking at this as, oh, this health crisis is gonna be done soon, and then airlines are gonna have a flood of demand and be back to normal. Not considering the amount of debt they're bringing on and how the business is actually going to be affected probably for the next 10 years. And then Delta's situation's even worse, bringing on $10 billion of debt last quarter and burning through way more cash than Air Canada. And so I actually think this is why Warren Buffett sold his airline stocks. He knows how the airline business works. They're extremely capital intensive and they burn through massive amounts of cash. There's very little profit margin on airlines. They usually only make profits on a few seats on a flight. So being how drastic of a change this was to the airline business, Warren Buffett probably realized they can't sustain this, and it would take honestly probably a decade to get back to where they were. So I think this is partly why Buffett sold his airline stocks. And then another thing to consider is what that analyst said, that those long haul flights where these rich businessmen spend a ton of money on their seats, that probably isn't going to come back in demand. As we move towards the digital age, it's just going to be lower in demand for those kind of seats. And like he said, that's where they generate a lot of their profit from. So I don't actually see the airline stocks being a good buy in the next decade. That's honestly how I feel about them. I think that we're going to really see them tank in the next 6 months. We might see them blip up as these stimulus checks come in, but it's really just kicking a can down the road. They keep on postponing the inevitable crash of these stocks, but eventually they're going to come crashing down. And so that's why for myself, I'm sitting on the sidelines. I do not want to touch any of these stocks. So make sure you guys give me your opinions on airline stocks. Are you a buyer of them? And if you are, please give me your guys' opinions on why you think that they're going to move higher in the future. Are you just trying to do a quick swing trade on them, or are you actually holding for the long term? I'd love to hear your guys' opinions. But that's all I have for this video. So if you found it informative, please drop a like on it. It really helps out the channel and with the YouTube algorithm. And feel free to subscribe if you want to see more stock related content. But I'll see you guys in the next video.